One of the other companies, sticking with the Kazakhstan theme for a little bit longer, Uranium One, they put out some numbers. Again, interesting. I think production is down slightly, but profitability up because they've been able to sell at higher rates. So swings and roundabouts there, but I suspect we're going to see a different sort of set of numbers from them, obviously in the next quarter. But again, what was your take on the Uranium One announcement? What did it tell you?
So on the face of it, what we saw was on a seasonally adjusted, so this period versus the same period
year
last
on year, yeah.
Their production levels were down by 5%. Now, what I think is interesting there is I don't think that number has taken into account what's happening in Kazakhstan yet, because Uranium One have got amongst the best of those Kazakh ISR assets. So the ones that I would expect to have the most resilience, the assets that would carry on producing at nameplate for the longest after the wellhead development stops, are that portfolio of Uranium One, together with one or two others that are in joint ventures with Rhino, and also Inkai's a fantastic project as well that Cameco's got. So I don't think we're seeing the effect in those numbers, and yet they're already down 5% for either just reasons of those assets depleting. We've talked before about how ISR mines do have a long tail where they start to run off and they start to deplete. They're not as binary as the conventional mine that essentially runs out of ore one day and grinds to a halt. So presumably what we'll see is continued reduction. And regardless of that, it's just indicative of what we're seeing across the whole market, whether it's Olympic Dam or whether it's the Namibian giants or whether it's Uranium One. It just seems that there's 5 to 10% being shaved off everyone's production numbers at the moment, assuming that they're still producing.
Okay. You think that's a case of wellhead decline versus deliberately reducing production because the price in the market is, if there was excess product in the market, why pump it out there and sell it for a low price?
I just haven't seen any evidence of Uranium One operating in that way. They've got low cost assets. What I've observed is they're quite willing to sell at the prevailing market price. And they were quite willing to do that even when the spot price was in the low 20s. So maybe there's an element of that, but it's nothing that I've been able to pick up.
Okay. I'm sort of intrigued to sort of see how these numbers play out in the next quarter, because there's again, harking back to conversations we've had previously, and I think something I want to end on with the US impression of what Russia and its allies are trying to do to uranium prices. I just would like to understand that at some point, and right now it's all speculation. But again, I think the final kind of Kazakh focused story for this week, as if we haven't had enough already, was Samruk Kazynia. They have put up, are offering up 5% of Kazatomprom. They're big holders, but I think the number we talked about it's about $150 million for about 4.5%. Again, why would they do that now? And they're a $75 billion fund, so I guess this is inconsequential to them. But even so, it's a big bold move. What's it say to the market?
So there's a couple of things here that are quite interesting. So yes, they're a very big sovereign wealth fund, but this is very important for them. A few years ago, Kazakhstan created a roadmap of privatizations, predominantly assets through Samruk Kazynia, but also other privatizations as well. And Kazatomprom was seen as being the flagship. It was the first ship out of the harbour with significant telco airline privatizations backed up behind it, etc., etc. So they obtained a plan or an approval back then to reduce their holding down to 75%. As everyone knows, there was the initial IPO where they reduced their holding to about 85%. Then in September last year, they did a secondary sale, which brought their holding down again by a few percent. And that 4.5% that you mentioned, that was actually what they were intending to do. And they ended up upscaling it, taking about 206 million rather than the 150, and reduced themselves all the way down to the 75% target. There's a small retail component back into Kazakhstan, but if you assume that that's all fully subscribed, then they will be bang on 75%. And that's box ticked. In terms of the timing, I think if you look at the share price graph of Kazatomprom in London, that probably tells the story here. The secondary placing in September last year was at $13 per depository receipt. And they've traded below. Now they've popped up above it, and it just looks to me like it was their first good solid opportunity to get the job done without doing it at a lower price than the previous price that was set. So well done to the Sovereign Wealth Fund, I'd say. But what it also means for the broader market is quite interesting, because there's another $200 million worth of stock that's been placed, predominantly institutionally. Generalist investors have picked that up. So one of the things that the uranium market has suffered from is just being so small. Very important, as we always talk about. You know, it's an incredibly important energy source, but the investable universe is very small. It's hard to get banks interested. It's hard to get analysts at broking firms and so on interested, to get enough volume going through their desk to justify them investing in coverage. So here's another 200 million out there. They did a switcheroo on their advisors, I saw. So there's another couple of advisors who are incentivized to get out there and talk about the story. And all of that just has to be positive for the market. It's just extra eyeballs, extra reason to talk about uranium and Kazatomprom. So I think it's a good development. And now it's brought that whole cycle to an end. And now Kazatomprom is the entity that we were waiting for it to become. Now, the other thing that I find quite interesting is, just going back to that interview for a moment, quite a bit of discussion about dividends. They've got a very generous dividend policy. And I must say, the folks at Nuclear Intelligence Weekly are very astute. You know, I like them a lot, and they're good, intelligent journalists, as their name would suggest, right? So they pressed and prodded and poked a bit on the dividend policy from two angles, really. First of all, and the dividend policy is to pay out 75%. And Kazatomprom made a commitment to pay out 200 million. The first angle is, well, you're going to need a fair bit of capital to get this wellhead development started up again. How are you going to go with that? Is there enough there? And Kazatomprom said there would, but you know, I think the fact that those questions were being asked is interesting. But the other element is the tenge certainly is very helpful for Kazatomprom. It's really dropped a lot because they've got tenge costs and a US dollar selling price. So in terms of running business, that's fantastic. Except when you've made a commitment in US dollars to send 200 million bucks out the door. So that was the other line of questioning, which is starting to pick apart a little bit at, well, if the tenge continues to fall, how's that going to help your capacity to pay dividends? And when the importance of that and the relevance back to the whole market is that's going to create further incentives at a commercial level for Kazatomprom to allow this market to continue tightening and to allow the uranium price to generate better margins for them, just so that they can keep topping up the bank account and to be able to both pay that dividend out as well as have the capital available to get started again.
Yeah, I mean, it's a very generous dividend. I mean, I'm stunned that they would set it at that. And in fact, I'm stunned that they would set it because they don't need to. Do you think it's under pressure from back home with the Sovereign Wealth Fund?
I'm not sure pressure is the right way. That's just how it was set. The Sovereign Wealth Fund is there for generating money out of its sovereign assets and deploying them into other parts of the country. So it has been a cash cow and they want it to stay that way. Undoubtedly, that's what it's all about.
Okay.
And they're creating those expectations to generate a point of difference, I think, on the LSE.